If you're looking to make some money off the AI wave, I have the stock for you. By the way, this is Cameron, your internet finance bro. This is a great value play, ticker symbol SMCI. That is Super Micro Computers Inc. And as you can see, they've been beaten down from their all-time high, currently trading at about $30.64 with an $18 billion market capitalization. Supermicro is a growing company selling server racks to data centers. They specialize in high-performance computing data centers and AI infrastructure. Effectively, they're bundling server products from multiple companies. So they might take a chip, a cooling system, and a GPU from multiple companies, bundle that together and sell it to a data center or a hyperscaler. I equate this opportunity similar to selling pickaxes to gold miners during the gold rush. Data centers and hyperscalers are spending a lot of money, a lot of capital expenditures are going into AI infrastructure, and Supermicro has capitalized on this by quickly procuring the newest chipsets and supplying them to these companies in the form of server racks. Their speed to market has allowed them to capture market share in this particular niche, and they have massive supplier relationships with some of the largest chip makers like NVIDIA. They also specialize in providing bespoke server rack setups as opposed to some of their larger competitors like Dell, who provide a more standardized product. This again has been really beneficial from the perspective of AI infrastructure in that they can quickly create very specific systems for infrastructure that doesn't really exist yet or is new to market. The stock is beaten down, however, due to concerns about potential accounting fraud and margin compression over the long term. This is overblown, however, and makes this a great value play. But let's address this head on. So first of all, as it relates to potential accounting fraud, this is possible. However, number one, if the rumors aren't true, then that in and of itself should provide a lot of upside. And even if they are true, the likelihood that the material misinformation placed on the recent filings being so large that there is really a material deviation in long-term valuation is unlikely. Another concern is long-term margin pressures. It's very likely that NVIDIA will continue to push to provide product direct to consumer. As a result, they might actually start taking market share in this specific niche themselves. It's also possible that competitors like Dell continue to do well in this space and take market share themselves. And all of that competitive pressure could put pressure on margins here at Supermicro Computer and drag down total earnings over the next decade. This is, again, probably a bit overblown. For example, NVIDIA actually prefers to have third-party suppliers. It allows them to get their product to market faster. And some of the largest competitors that SMCI is dealing with, for example, Dell, are more standardized in their approach. They don't offer the bespoke server rollouts that SMCI can offer. From a financial perspective, we're likely to see massive revenue and net income growth over the next 1 to 3 years. From 4 to 6 years, we're probably going to still see some massive growth, albeit at a slightly lower pace than these upcoming couple of years. And then finally, we'll see some terminal growth from, call it, years 7 to 10. Conservatively, we're probably looking at about $30 billion of total net income over the next 10 years. More aggressively, probably more like $40+ billion of total net income. A simple discounted cash flow analysis at the current valuation of $18 billion against those numbers makes this stock look pretty attractive. And keep in mind, we're seeing 100% year-over-year growth in AI data center infrastructure spending. That is to say that every year, recently anyway, the amount of money being spent on data centers, specifically AI infrastructure, is doubling every single year. At the end of the day, though, Supermicro is just a middleman. They're taking components from numerous companies, compiling them together, and selling them to data centers. They have no real competitive moat long term, and for that reason, this should be a small portion of your portfolio. And that's because they're a middleman. However, they serve a very important purpose in this market. It's a growing market. It's one in which they have capitalized on tremendously, and from a valuation standpoint, this is just too beaten down not to take a second look at. Allocating a small portion of your portfolio towards this stock could provide some much needed alpha in your portfolio over the next couple of years. And again, my name's Cameron. If you enjoyed this content, please give me a like and follow.